Good morning and welcome to this session of the live virtual coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. Good morning, Sriram. A lot of people are there. As you keep coming in, I'll may not be able to greet you because we'd be in the... So the shareholders are the owners. The directors are the people who handle the management of the affairs of the company. So they are called the managerial personnel. You also have the company secretary, the CFO, the chief financial officer, the CEO, if any. But I seriously don't know I'm unable to see the difference between the two. But I think I explained it the other day. See, MD is a director, whereas CEO may not be a director. CEO may be just a self-employee, but he would have, if he is appointed as a CEO by the board, he becomes a key managerial personnel. CEO need not be seen. CEO may be a director, may not be a director, and he will not have substantial powers of management. And he would be an employee. But if he is appointed as a CEO, Chief Executive Officer, then he becomes a KMP. More about it later when we come to KMPs. But as of now, I think we already saw who is a KMP, Key Managerial Personnel. So these guys together are called managerial personnel. Out of this, all these guys, the most important is the managing director, MD, and manager. There are two categories. We'll see how that happens. So managing director and manager. So these two guys are very important, and their appointment and remuneration is very closely monitored. Also, the remuneration of directors as a whole is restricted. Some of you who have studied auditing well or cleared that group or whatever, or accounting, maybe sometimes in accounting you get corporate accounting, you would have studied the limits for managerial remuneration. Today we are going to see the legal background. So there you will find there is an overlap between auditing and company law, where there would be a question on managerial remuneration even in auditing. Because as an auditor, before you certify the balance sheet, you should assure yourself that the managerial personnel have been paid remuneration in accordance with the limits prescribed under the Companies Act 2013, which is what we are going to see now. Right? So some more people have joined, that too on a Sunday morning. That is great. And so we have Sriram, Viraj, Vanubera, Kaushiki, welcome madam, Prashant, welcome. And Namrata is also here. Good show. So let's go on. Again, let me assure you the topic has some challenges. Not because it is difficult, but because they have made it difficult. See, so I'll try to make as much clarity out of it as possible. Earlier, this whole concept in the old law was contained in a schedule called Schedule 13. Here we are going to talk about another schedule called Schedule 5. Schedule 5. Okay, don't worry. Let's go step by step. The first step is to know who is managing director, who is manager. Now, why at all there is a definition of a manager? This whole concept of manager, let us get it behind us. Definitely no company will appoint a person and call him manager. For example, the most important guy in that company, the top honcho, nobody will call him manager, right? But what happened in those days, and I'm talking about 60s, when 56 the law was passed, there was a restriction on managerial remuneration, there was a restriction on MD's remuneration, etc. So immediately somebody had this brilliant idea. They said, only if he is a director, there is a restriction. So I will have a guy, an individual. I'm going to the manager definition first. An individual who, subject to the superintendence and control and direction of the board of directors, has the management of the whole or substantially the whole of the affairs of a company. In other words, except that he has to report to the board, this gentleman would have the management of the whole or substantially the whole, including hiring and firing, buying of assets, capital, capex, approval. Almost everything would be in his hands, manager. But he would not be a director. Therefore, he would not come under the definition of MD. Thereby, he would escape the remuneration limits, was what those gentlemen thought at that time. So, in order to correct that, they defined one more definition. They said any individual who, subject to the superintendent's control and direction of the board of directors, has the management of the whole or substantially the whole of the affairs of the company, would become a manager. So even if he's not a director, he'll be a manager. It includes a director or any other person occupying the position of a manager by whatever name called. For example, you might call him general manager, you might call him executive, whatever you call him. If he is having the power management of the whole or substantially the whole, and he is subject to the supervision and control of the board of directors, then he is a manager. Why we define manager? Because all the rest, just listen to me, this is the most important point. Suppose a guy says, look here, I'm not a director, therefore I don't come within the purview. They will say, look here, even if you are not a director, you come under the definition of manager. And all the limits and conditions applicable to MD apply to manager. That is all. So they have ensured that this type of loophole is clear. That is why manager. So today nobody will appoint a manager, Baba. Why? After all, appointing a manager is as the same as appointing MD. Why you will call this man manager when you can as well make him managing director? Are you able to understand? So understand. I know this is a little difficult for some of you to get over. This whole manager thing is not at all relevant. But why it is there? Because if it is not there, then this argument will come. Any guy who is not a managing director, but having management control over the whole or substantially the whole of the company would escape the limits prescribed under the Act. Therefore, they say, even if he is not a director, if he is having the whole or substantially the whole of the management of the affairs of the company, he is a manager, and all the limits and all the conditions applicable to MD will apply to manager. Got it? That's it. With this, whenever I use the word manager, just listen with this here and leave out with that here. That is all. Otherwise, there's nothing. Because today, believe me, this amendment happened in 1960s, 64 if I remember right. Okay, and it's been there in the law forever and ever. Even they're continuing it for obvious reasons. Because if you remove it, then again that old loophole will come back. So they've kept that manager guy definition. But so managing director, now that is important. Because in India, this MD is a very, very powerful position. In fact, in India, we made two stupidities. I'm sorry to use the word stupidity. I have no other word to use for it. We have a title in India called Chairman and Managing Director, CMD, Chairman and Managing Director. Stupid. Kyun? Why? I'll explain. Later on, you will see Chairman. There is a position called Chairman in a company. Who is that gentleman? He is an independent director, a non-executive director, ideally an independent director, not necessarily, need not be an independent director, but should be a non-executive director. And that gentleman would be the chairman of the board. So he will be a very senior person who has a lot of knowledge and, who has a lot of awareness about industry, whatever. Therefore, he would be the head. And the MD, also known as CEO, would be running the company. So every once in a month or once in a quarter, the board will meet. The chairman will review everything. And he will be asking tough questions to the MD. So the chairman is the conscience keeper. So he will be the man who will ask the questions and give them direction and tell them, hey, possibly you have to review this. Do something about it. So he would be there, but he would not be an executive director. This is the powerful role of a chairman, which is played in England, Europe, and US. In Europe or England, every company would have a chairman, sometimes known as president, and a managing director, known as CEO. So these are alag roles. Only in India, we combine the two. And we have this peculiar position called chairman and managing director. Same person should not be both. They are alag. Sorry, but this happens even in big banks. Now they have removed it. Now chairman is separate, MD is separate. MD would be running the affairs of the company. Top man, he is a director who by virtue of the articles of the company or resolution passed in its general meeting or by its board of directors. So either there should be an agreement with the company, contractual, or a resolution in the general meeting approved, giving the terms and conditions, or a board resolution. It could be an agreement, a general meeting resolution, ordinary, or board of directors board resolution. By virtue of that, he is entrusted or he is enabled with substantial powers of management of the affairs of the company. Substantial powers, meaning complete. See, the MD can almost do anything. You know what? In the next topic, we are going to see now the powers of board and meetings and powers of board. Basically, is about restriction of powers of the MD. Able to understand? Later on, when you come there, you will find MD can do almost everything, substantial powers. But there are certain powers that the MD cannot exercise on his own. He has to ensure that the decision is taken at a meeting of the board or at least a resolution by circulation. We'll see that when we come there. So, MD's power is supreme. The law places certain reasonable restrictions. Other than that, for example, hiring and firing of below the directorial positions, below director, CEO, CFO, all other positions, company secretary, these positions, other than key managerial personnel, MD can appoint anybody, fire anybody at his discretion. Of course, you should go through a process like there may be some service rules and all, but ultimately it's his decision, boss. Even though there's what is a service rule? You give him an opportunity, give his representation. That's about it. And then once because disciplinary action is in your hands, yeah. And once you decide, you are decided. Similarly, purchase of assets. But for a few, he can buy any capex plan, he can approve it. In professionally managed listed companies, also these decisions will be taken by a committee, and then that comes beyond the dreams of avarice. If it is bad and the company does badly, he becomes a pauper or commits suicide. That is the level of, which is many reasons why in India we have a lot of family-owned businesses, including Ambani's. Okay, I always distinguish family-owned business, family-run business. Are you able to understand the difference? Family business, which is small, dukan types or provision stores, bania types of things. That is family business. Then you have family-owned businesses, which are huge factories and all. But then they are run by the family also. That's called family-run, family-owned business. But there are some businesses, like for example, Ambani or TVS Group and all, who are family. It's basically family-owned, but substantially they have delegated the powers to professional managers. So professional management runs the company. The operations are run by professional management, like CEO, CFO and all. So CEO, CFO and all have substantial powers. But finally, it will come to the MD, who would be a family member. Are you able to understand? That is why family-run business also, the MD post will be a family member who has substantial powers of management. But then, once they are properly advised by consultants, they know what is what. Delegation would happen at a very high level. Empowerment would happen. There will be a separate executive board. All that. But ultimately, one man will be there. Okay? So it would be Mukesh Ambani. It could be Dhirubhai, whoever it is. Ratan Tata, whoever. That one man would be the MD and he would have substantial powers. So that's, you might ask me, is that good or bad? And I would humbly submit to you that it is neither good nor bad. It depends on the guy who's doing. You give him that type of power to a great man, he will do great things. You give that type of power to a Buddhu. See, some second generation family-owned businesses fail because this type of power goes to the second generation who don't have any experience, or possibly they have knowledge. Even knowledge they don't have in many cases. They simply come and sit by virtue of being family, and then sometimes there is a problem. But then also he is the managing director. Okay, so everybody else has to, his sign is not there, nothing can be done. So everything goes to him for approval and comes back, right? So I'm just giving this background to you so that you will understand why the MD becomes a very, very important position in a company. Okay, MD and whole-time directors. In the example I gave you for appointment of directors, I gave you the board of directors of the Adekar Industries Limited. We will be seeing the same board of directors in this topic also. I will be using it for my assignment or for my practical question. I will be using Adekar Industries, wherein I will show that Vijay Adekar is the MD. Vimala Adekar and Vimala Adekar, wife and son, are whole-time directors. It's a classic example of a family-owned, family-run business. Highly successful. I assure you that. Adekar Industries is highly successful. But that's because of the hard work that these key guys put in. Okay, the owners, they come and sit. They run the business. And they are advised by a professional board. Possibly they might have divisions. And each division will have a CEO. See, this is the level at which professional businesses operate. Even family-run, family-owned businesses. But some businesses reach a certain level where the family gets a backseat and the professional management takes over, and thereafter the family may have a stake. For example, 20 to 30% of the share capital may be held by the family members. The rest of it would be either publicly held or institutions would hold it, whatever. Just for your background. So MD is a director who, by virtue of the articles of a company or an agreement by the with the company or by a resolution passed at his general meeting or board resolution, is entrusted with substantial powers of management. It includes the director occupying the position of managing director by whatever name called. You call him whatever you want. Okay, you call him the great Panjan Drum. You call him whatever you want. If he is having substantial powers of management of the affairs, he is an MD. If he is a director. If he is not a director, then you come here. He will fall under manager, where he would have superintendence, control and direction of the, under that condition, he has whole as management of the whole or substantial whole of the affairs of the company. Either way, he'll get caught. Ultimately, the restrictions placed on appointment and remuneration will apply. That is the point. We have one question from Sriram. Let's see what that is. Can the same person hold all the position, chairman, manager? Sir, in India, it happens, sir. It regularly, it happens. There is no prohibition. But now they have made a prohibition. Now, we'll be seeing chairman later. You'll see same person cannot be chairman and managing director. But managing director, CEO are sort of synonymous. Company may not have a CEO. The MD himself will play the role of a CEO. See, you should understand. The concept of a managing director is an Indian concept. Only in India, we have one more position called MD, CEO and all. The so-called MD is the CEO. See, the position that Jack Welch held in General Electric, the CEO. But that's basically your managing director. In India, we are unable to let go of that MD designation. See, how much ever you use the word CEO, Chief Executive Officer, Indians still like that managing director, MD. Not, in fact, managing director is also, it's never used in full form. You will always abbreviate it to MD. So the minute a senior employee comes in, he asks the secretary of the, has the MD come? First thing they ask, all senior positions, CFO, right? First thing they get in from the car, get into the reception. The first thing they ask the receptionist, has MD come? Because he's worried, because the MD has come and he's called me, I'm not going. So that supreme power, MD. Same guy in US, he'll be called CEO. Only in India, we have a separate thing called CEO. Okay. Therefore, what we have done in India, we have watered down the CEO. CEO today is head of a strategic business unit or a division. Whereas the MD is the MD. Okay. Top honcho. But chairman and MD, not possible now legally, not a good idea corporate governance wise. It is better to have a senior person as a chairman who would be a sort of monitoring. And the MD would be the guy who runs the day-to-day affairs. Okay. See, it will happen ideally in a family-owned business. The ideal would be the father becomes the chairman and the first son becomes the MD and runs the business. I've seen this happen in many cases. So the father would be the chairman. Idea is he should not interfere in day-to-day affairs and he should sit in the board and only give them direction and all. Whether that happens, that's a different thing. But that's one way of solving the riddle. CEO could be, I don't know. Okay. So to answer your question quickly, chairman, managing director, not possible. MD, CEO, same guy can be, nothing. But once if he's holding both the positions, believe me, his card will say only managing director. No Indian would ever take CEO as a title because for them, CEO is a lesser position. Believe me when I say this. Okay. Perceived as less. Though in US, for example, Sundar Pichai is CEO now. Am I correct? All of them are Steve Jobs or CEO. They were all CEOs. The word managing director, if you go to US, you go to New York and say, I'm the managing director. Hey, what? Managing director? Then you'll have to explain, I'm the CEO. Oh, you are the CEO. Okay. Means you can take all the calls. The buck stops with you. You are the top man. That's what it means. Whether you call yourself CEO or whether you call yourself MD, that's what it means. If you have substantial powers of management, which is why in India we have CEO as a KMP. That KMP will not have substantial powers of management. Are you able to understand? That fellow will have only, for example, we'll give him a division, or he may be heading only marketing, operations, like that. And he'll be handling that one company vertical, whatever. They'll be called CEO. Okay. Whereas on top of all of them, there'll be one gentleman called MD. That is the MD of the company. So if you want to locate the MD in the organogram, don't look in the middle. Look at the top. Who is at the top? That guy is the managing director. Even if he calls himself CMD, which is wrong, he is still a managing director under 254, liable. Okay. Now, the word substantial powers of management has been used. So what is substantial powers of management? The power to affix the common seal of the company to any document. Now, to draw and endorse any check, you can delegate that to anybody. Are you able to understand? Merely check signing power, no. In fact, in highly professionally managed company, rarely MD will sign the check. That power will be delegated. Rarely MD will sign the checks. On really top companies in them. There will be a committee and then finally it will be signed by the designated authorized person, who could be CFO, who could be purchase manager, who could be anybody, or dual signing. All that is part of internal control. When you come to auditing, you will understand. As the company becomes bigger and bigger, we need internal control. So dual signing could be there, committee could be there, approval of committee, the whole thing will be there. But that is not mere signing checks will not make him substantial powers of management. Or drawing and endorsing any negotiable instrument. For example, signing a promissory note, or drawing a bill of exchange, or accepting a bill of exchange, or endorsing a bill of exchange. These things do not amount to substantial powers of management. Similarly, signing on share certificate, no. Directing registration of transfer of any share. These are all powers, because the above powers are administrative acts of a routine nature. May be exercised by any senior level employee. For example, a company secretary or the CFO can be authorized by the board to do these things. And so that is how it is. Thank you, Sri Ramji, for your nice words. Okay, good. So so we've seen definition of MD manager. Now we are going to see another important definition. Whole-time director. So he is a director. It includes a director in the whole-time employment of the company. Okay. Whole-time director. In the whole-time employment of the company. The word whole-time means he need not come in the morning and go in the evening. But he cannot be a whole-time director anywhere else. You can be a whole-time director in only one company. Which is why, if you are a practicing chartered accountant and you are in full-time practice, you cannot be a whole-time director of any company. But you can be part-time director, non-executive part-time. But you cannot be whole-time director. Okay. Of course, you can be a part-time director subject to the conditions like disqualification. You cannot be part-time director in a company and the auditor. That all that you know. Okay. But the point is, whole-time means that's it. He can't be whole-time in two places. Yeah. Okay. Okay. Some questions are come. Let us see. If a person is not appointed as MD but have substantial powers of management, then also you become. See, if you're saying that he's having substantial powers of management, and if you're using the word substantial powers of management, but he is not appointed as MD, yeah. Madam, see what is that? By whatever name called. So in your question, the assumption is that he is a director. So he satisfies two conditions. Yeah, he is a director and he's having substantial powers of management. Then he may not be appointed as MD. He may be called anything. Okay, but by whatever name called, he would be MD. That is already explained in 2 subsection 54. Come to another situation where he is not a director, but you are giving him substantial powers of management, which is nothing but management of the whole or substantial the whole. He will become manager. If he is not a director, he will become manager. What is the point of this whole activity? Why are we spending so much time on this definition? To help you understand that whatever you do, the limits and remuneration limit and appointment conditions will apply to MD and manager equally. You call him what you will call him 40, pay him 40. He will be a MD. If he is a director, MD. If he is not a director, manager. Either way, if he has substantial powers of management or management of the whole of the substantial whole of the affairs of the company, he is a God. See, the idea is simple. When you give such powers to these people now, they want to make them accountable for their actions. So if this guy cannot just come and say, I'm MD and takes salary and go, you take it. But is the company making profit? You take from the profit. So they have said managerial remuneration is linked to profits, which is why we are going to see elaborate method of computing profits, 198, which you would have studied in auditing. Same thing I'm going to tell here. Elaborate method of computing profit, reworking profit, so that only on that reworked profit, this fellow's percentage will be calculated. So his commission, his salary, etc., everything will come into that percentage. Okay. Part-time practicing chartered accountant be an MD? Yes, he can. But then why would he be a part-time practicing chartered accountant? Or chairman of a company and all saying, boss, my suggestion to you, if you want to practice, practice. If you want to be in employment, be in employment. Part-time practicing is a little, nothing, you cannot do much. If you are a partner in any firm, that firm cannot claim you as a partner for many, many things, for bank audits, for any counting, you will not be counted. Part-time will be excluded. So seriously, this part-time practicing, yeah, if you are saying you are a part-time chartered accountant, you can be an MD or chairman of a company. Chairman, you can be now. Chairman, anyway, you can be. But why be part-time, boss? Because chairman will be a part, so I'm not going to, nor can his relative be appointed or his partner and all. That you know. And other than that, any other company, so A is in part-time practice, he is a MD of a company. Can he sign balance sheet of some other company? Yes, he can. But subject to the disqualification criteria. He cannot do it in the same company or where his relative is a chartered accountant, that cannot. Okay. So subject to that, he can. Any other company, he can. But not a good idea. Again and again, I'm telling you, not a good idea. He is already employed somewhere. Somewhere there will be conflict. Better not. Okay. Get into full-time practice or else be in service. Don't do this in-between type of things. Be careful. It is possible, but be careful. Why I'm being so carefully now? It's so easy to conflict of interest can happen. Today, there are a lot of issues. So be very, very careful. A practicing chartered cannot be employed for full-time anywhere. Even if he's an old-time director of a company, he's not allowed to do practice. No, sir. Not like that. You can be in practice, but if you are in whole-time employment with a person, you can hold your COP, but you will not be in full-time practice. You will be in part-time practice. That is all. You can be MD also. Once you say that, you can be MD also. He is allowed to do practice. Nothing wrong. He can sign other balance sheets and all. Part-time in the evenings, he can do that. That's why he is called part-time practicing. Otherwise, why will you hold a COP at all? See, there are some people, what they do, they always have the dream of becoming a practicing chartered accountant. But their financial circumstances are such, initially, they are unable to take up practice. So they will be in employment. In spite of that, they will continue to hold the COP. Technically, they can sign balance sheets and all. Technically, they can sign balance sheets and all for companies. But if they are partner of any company, if somebody is part-time practicing, I wouldn't take him as a partner in my firm. I'll say, sorry, sir, what is the use of you? You'll be counted for nothing. And I have three, four full-time partners. Why I need you? So generally, part-time practicing, not a great thing. But your statement that he is not allowed to practice, you might want to revisit, Sriram. He is allowed to, that is why he is part-time practice. Okay. He can be, practicing CA can get employed, but then he can't be called full-time practice is not there. That's all. He will not be a full-time practicing chartered. Yeah, I've been telling this from that day. You can be a part, sir, I am a full-time, let me take my example. I am a full-time practicing CA. Okay. I have a COP. I am full-time. I've been practicing since 1987. I've been in practice. Because even when I worked in Price Waterhouse, I was working in Price Waterhouse as an audit officer, junior officer audit. Then I went on to become master manager audit. Then I resigned. That was almost 3 years of my early stage career. I was an employee of Price Waterhouse, not Price Waterhouse Coopers, Price Waterhouse. And during that period, with the permission of PWH as we used to call it, I was holding my COP. But I cannot, I'm part-time because I'm full-time employment with PW, and there is a prohibition for me by PW that I cannot sign balance sheets. Why I was holding my COP? For continuous practice. So that when we count my period of practice, it will begin from the day I applied for COP and got it, and then till date. Holding COP date. Okay. Got it? So it's our choice. Nothing wrong. Anyway, good. So this is, see, video is getting stuck. You might have to be patient. I can do nothing about it. Please understand. Just be patient. It'll get corrected by itself. If there is any major problem, the Institute technical support people will inform me. Otherwise, just be patient. Or you send a mail to support team is watching this. Support team is very much actively watching this. So I understand your problem, Mr. Sriram, but you will have to bear with this, because I can do nothing about it. I can do nothing about it. If in case there is a real serious problem, the technical support people are already on the job. They will tell me. Okay. So this could be something localized also. I'm not saying it is. It could be something localized also. Your side could be. I'm not saying it is. Don't get angry immediately and say no. Don't react. I'm just saying it could be. Chalo, let's say goodbye to this practicing CA thing. I know most of you are not going to practice. Okay, don't worry. All of you are going to be in employment. Once you are in employment, be full-time in employment. Don't bother about practice. Enjoy your at least employment. Earn well. Grow in your organization. If you want to practice later on, when you're 45, 50, look at coming back to practice as a consultant with specialized knowledge. Then you cannot come back to the type of practice I started in 1991 was a full practice where all, full service practice where I'll do tax audit, I'll do statutory audit, I'll do tax representation, I'll do tax advisory, right? Everything and anything under the sun I will do. Okay. So that type of practice may not work at a senior level. Once but you can look at specializations, banking. You can help people to solve financial consulting like that. That such things can be done after employment, because you would have acquired some experience in employment that you can bring in. Okay. No company shall appoint or employ at the same time MD and manager. So a company cannot have both MD and manager. But this is also logic now, because one person cannot have substantial power, another person will having management control of the whole of the affairs. Not possible now. Two people cannot control completely. So now they have told very clearly, company cannot have MD and manager. One more reason for this is they want to avoid double remuneration. So what a company may do, they may appoint the elder brother as MD. Then the younger brother will not be on the board, but he will become manager. So you pay him also. No, not possible. You can't have both MD and manager. Only one MD. Okay, aka Basha. Only one. Nobody else. But you can have a managing director and whole-time director. See, whole-time directors do not have substantial powers of management. So, for example, in our example, I showed you now, Vijay Adekar, MD. Vimala and Vimal were whole-time directors. You can have more than one also. You can have 5 whole-time directors also. Nobody can prevent you. So, for sake of convenience, we will refer to managing director as MD, whole-time director as WTD, manager as M. Okay. So, sometimes I'll be using this statement, MD, WTD, and M. for sake of convenience. Unfortunately, or by design or default, the word part-time director is not defined anywhere in the Act. But second proviso to section 197(1), for some other purpose, it says directors who are neither managing director nor whole-time director. So it is like MD is defined, whole-time director is defined. So anybody who is not MD or WTD, but a director of the company, by definition would be, by logic would be part-time director. But see, for purpose of remuneration, they talk about part-time director. That is the beauty of it. When they talk about remuneration, they talk about part-time director, but they have not defined part-time. Since they have defined WTD clearly, employment, the whole-time employment of the company, MD is again a director who is engaged in the day-to-day management of the affairs of the company, has substantial powers of management. So if a director does not fall under these two categories, then automatically he becomes a part-time director. Another term for part-time director, non-executive director. Another term for whole-time director, executive director. So suppose I use the word executive directors, part-time. Normally we don't use the word executive directors. We use the word whole-time directors. But for part-time directors, sometimes we will use the word non-executive director, right? Independent directors are non-executive directors, part-time directors, right? Hope the video is better now. If not, I don't know. See, if it is something to do with my connection is good. I doubt if my connection is the problem. Anyway, let me be informed by them. Having seen the definitions of MD, WTD, and M, thank you, Sriram. Now, let us look at the conditions for them. Now, you get into the modalities. So, first thing we are going to talk about is tenure. The word tenure means period of office. Period. Tenure means period. Tenure or tenure means period. So, the term of office or the period of office of MD, WTD, and M, shall not exceed 5 years. So they can be appointed only for 5 years at a time. 5 years at a time. And one more thing, please be careful. Though you appoint them for 5 years at a time, your retirement of directors by rotation thingy also will happen. So there they cannot say, I have been appointed for 5 years. If as per the seniority, this fellow is going to retire at the next AGM, he cannot claim this 5 years. What you need to do is, you need to get him, he needs to be reappointed at the next AGM, so that he'll complete his 5-year tenure. Okay, thank you. I will see, I'm using one connection which is good. Let us see. That's what nowadays, see, as a Hindu, I worship the natural elements. I worship fire, I worship earth, Prithvi, I worship water. Okay, I worship God everywhere. I can see God in all the 5 elements. Now there's a 6th element which is called internet, connectivity. So God is there also, so I worship that also. Okay, see, we worship the 5 elements because they are everywhere. We see God in the 5 elements and we say, protect us from. So now we have to pray to this 6th element, internet connectivity. Of course, I don't think it's a 6th element. It would come under fire technically, but then whatever it is, I always make a silent prayer to the God of internet and say, ensure connectivity. Like that. Chalo. Now, so term of office 5 years. I hope you understood what I said about retirement of directors by rotation. That is superseding this. Even though you appoint him for 5 years, he will, if he is liable to retire by rotation, which is why, did you notice what I did? In the example that I gave you, I protected Vijay Adekar, Vimala and Vimal because they are MD and whole-time director. as much as possible, push the MD, WTD into the not so liable category. This is a suggestion. Okay. This is if I were doing this, I would do that. So I will calculate the total strength, then not less than 2/3 are liable, then remaining are not so liable. Now, in that remaining category, I'll bring MD, WTD and all, so that their 5 years will continue uninterrupted. But if I have no other go, one of these whole-time directors will have to retire. Sorry, what to do? He has to retire. Again, you reappoint him. Nothing else. One more thing. We already saw this in additional director problem. Do you remember? Additional director holds office till the next annual general meeting. So if at that IAGM he is not reappointed, he will no longer be director. So if he is not a director, then he will not be an MD. Correct. Okay. Sunday morning quiz. Sunday morning common sense question. Which came first? Or who came first? Who came first? Father or son? Who came first? Father or son? Who came first? Father or son? In the context of MD or director, director came first, then only MD. So if director goes, MD goes. Agreed. Who came first? Father or son? Father. I think you put F, so I assume that you are saying father. Any other thoughts? Think a little differently, you will get what I am trying to say. Father is an obvious answer. Chronologically, yes. But at the time when the father was born, was he father? He was an ordinary person. When he became father, when was I congratulated and my brother-in-law calls me and says, congratulations, you have become father. At that time, my son was born. Na? So son comes first, only then father. Thinking differently, that is all. Okay. See, as CA students, correct, Sriram says father, so son comes first, only then father becomes father. Okay. Think about it. I mean, most CA students are good at left brain. You are all brilliant in left brain. You people are good at calculation, 2 + 2 = 4, blah, blah. That is good. I'm not denying it. I'm myself a chartered accountant. But somewhere the edge would be with people who can also use the right hemisphere of the brain. You might ask me how important it is. For a CA, not very. You can be a successful CA, earning well, etc., without using the right hemisphere for a long time. The nature of your subjects are like that. All logical subjects, linear thinking. If you mug up, you know, you write, you get, you become all that. So in your case, you might not need your right hemisphere for a long time. You'll hit a roadblock at 35 to 40. When if you continue in our industry, no problem. If you are going to be only in the finance silo, no problem. Till you die, till your retirement, you can use your left hemisphere, forget right hemisphere. You will not be able to understand a joke. You will not be able to enjoy the type of subtle humor of PG Woodhouse. Doesn't matter for you. But if you want to grow in the hierarchy and become CFO, this, that, blah, 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 at that point in time, you might suddenly find a roadblock. Therein, you might have to go for some more relearning, upskilling, whatever we call it now, and get into right hemisphere approaches. I conduct a 2-day workshop for corporate executives, not CAs, engineers and all, on creative thinking and right hemisphere. You might ask me, after all, a chartered accountant, what is your thing? I'm also an MS in management systems. I'm a corporate trainer. I'm just giving this to you now. And you know, our institute, I'm sure some of you who are doing final would have attended advanced MCS. Why do you think we are conducting this advanced MCS program? 15 days. You think it's to waste your time? No. Idea is to bring some of it into you as early as possible to help you to understand that behavioral issues are important. See, mugging up and vomiting company law, you will get 60, 65, or not even have to mug up and vomit. Just listen to me, go through my lectures, you will get 65. Okay, 60 plus assured. More than that is your talent. Any subject, good teachers can help you, or your own efforts, your own industry, and our instruction will see to it that you are successful. But in the bigger game of life, my dear friends, the rules are different. The syllabus is different. Advanced MC is 15 days. If you have already attended, don't ignore what you learned there. If you have not attended, attend with an open mind. 15 days of exciting learning. Don't miss it. Don't treat it as some boring thing that you have to go through. Please. This is my humble suggestion to you. I'm a faculty for the advanced MCs in Chennai. At SARC, I do that once in a while. Whenever I get the time, I'm not traveling, I'm there, I go. Because I like to interact with youngsters. And I find that many of you are highly intelligent. Intelligence is one thing, little differently. Little come out of the comfort zones in which you have put yourselves. Okay, and you will be able to. Sorry for this unnecessary bhashan on this, but very, very crucial skill. Okay, don't forget it. Using both the hemispheres of the brain, not just the logical, linear, straight thinking, Look at the right hemisphere also. Creative. Read other books, unconnected with your core subject. And good. So Kaushiki says she attended and enjoyed. Others who are not attended also, don't treat it as some sort of a boring thing. Go with a lot of expectation. People who come would also bring a lot of experience with them. Go there and take. Thank you for listening to this and moving on. Reappointment shall not be made earlier than 1 year before the expiry of his term. Okay. So, reappointment shall not be made earlier than 1 year before the expiry of his term. Meaning, you appoint him for 5 years. Then at the end of the second year, you cannot again appoint him for another 5 years. Okay. So you can appoint him only at the end of the 4th year. Suppose 1 year before the expiry of his term. So around the end of the 4th year, you can reappoint him for another 5 years. Okay, good. Now we saw tenure, meaning period. Okay, now we move on to. We saw the disqualifications applicable to director. Do you remember that? We saw the disqualifications applicable to a director. There were 8 disqualifications. Am I correct? So, if you want to appoint a person as MD or WTD, he should be first clear of those disqualifications. As you have yourself pointed out, director first, then only MD. So, he should not be disqualified from being appointed as a director first. For manager, this is not necessary. He is not a director, therefore he not. But once he clears that and comes here, there are further disqualifications only applicable for MD. So he may clear the disqualifications for director and be ready. But you have to ask him further questions. And if he does not satisfy that, he cannot be appointed as managing director, whole-time director or manager. Okay. So the first condition, the person should not be below the age of 21 years. Below the age of 21. So 21 is seen as some sort of a maturity age for appointing MD, below 21. But today with startups and with, people, I don't know how relevant is 21. I don't know, but still they put a condition of 21 and they said below 21, no. Similarly, he should not have attained the age of 70. 70 is seen as some cutoff for thing. But this is something I would not. When was that? On Thursday, I was not Thursday. Wednesday, I was I was in my club with a couple of friends when a senior member walked in. He is also known to us through other. So he came and we said, just join us, sir, for thing. So when he was sitting down and we were all talking, 90 years old, brain is active, body is active. He's thinking clearly. He's bringing with him experience, 90 years old. Okay. Recently, I met another person, 70 years old. Yesterday, I was traveling with him for one function where he was 70 years old. I know him for 10 years now. Suddenly he said, Srikanth, I'm now 70. So I can't believe it. 70. So 70 is not at all any way. Of course, little bit, they will become a little Buddha. They may not be able to, they'll talk a little more, etc., etc. But that's there. But having said that, 70, but then they've prescribed 70 as a limit. That is why they have given a slight concession. A person above 70 may be appointed by passing special resolution. Because sometimes, see, my father is now 82, practicing chartered accountant, senior partner. Now he's reached, his health is out. But believe me, 10 years before, some 74, 72, he was very much active. He was aware of the income tax provisions, latest amendments, and he brought with him wisdom and experience. So he was consulted. There were clients coming to meet him only to get his advice and all. So they would come to him and he will guide them. Then he will send them to me with a note and say, this is what I'm suggesting. You look at it and you do what you think is best. What I'm trying to say is 72, 75. So till 75, he was very active. Mentally still active. Physically, he became a little tired. So a person above 70 years may be appointed by passing special resolution. If special resolution is not passed, but simple majority is obtained, then appointment can be made with approval of CG in appropriate cases. So either way, 70 is a cap, but if you want to beat 70 and appoint a person more than 70, you can, provided you pass a special resolution. But if special resolution is not passed, but simple majority is obtained, please understand the point. This is very important. You are holding a meeting to pass. What is that special resolution for? Not for appointment. Please understand. Appointment is another resolution. This is only for accepting that a man above 70 years may be appointed. So resolve that so-and-so may be appointed as MD, despite the fact that he is so-and-so age, more than 70 years. So you propose it as a special resolution. You propose it as a special resolution, right? Put it to vote. Now I'm going to ask you another question because the word special resolution has come. I'm going to ask you. Janvi Agarwal has a question. We will go through it. I will answer your question little later, madam. I will come to your question. Before I pass over from the slide, I will come to your question. Right now, I just want to ask you all. I want to ask a question to all of you. What is a special resolution? You can put up your answers on the query pad. I'm waiting for your answers. What is a special resolution? I'm expecting answers. Janvi Agarwal's question I have read, but I will answer you. But before that, let's complete this. More than 2/3 in favor. Chalo, hey, I want all of you to answer. I want all of you to answer. Most of you to answer. Go on. Please don't be idle. Put whatever you think. Put whatever you think. More than 3/4 total voting in the favor of resolution. At least 2/3 of the members attending the meeting should vote in favor of the resolution to consider the resolution successfully passed. More than 3/4 of the total number of votes are in favor. All of you are okay. Will you believe me? No. 2/3 is absolutely wrong. 3/4 is absolutely wrong. You're either you have not read the section or you have forgotten the section. Or you have forgotten what was taught to you in intermediate. That is why I'm asking this question now. See, special resolution was taught to you when you were in intermediate. Srikanth should not teach. You will get angry with me, sir. Don't waste my time teaching me special resolution, sir. I know everything, sir. You know, sir. But is it 3/4 or is it something else? Okay. Any one person can give me the correct answer? Sorry, none of you is correct. I'm sorry to say this. All of you are wrong. Section does not use the words, these words. Section does not use the word 3/4. Section does not use the word 2/3. I know some of you will get very angry with me for telling. Generally people get angry when you tell you are wrong. So I will not say you are wrong. Okay, you are not wrong. I am unable to say that you are right. Forgotten is the correct answer. More than 75%. Where you got the 2/3, I seriously don't know. 2/3, that is in constitution, I say, parliament. There is no 2/3 in Kamala. Okay, allow me to do one thing. And also I will show you, this is very important. What I'm going to do now is I'm going to go to the net. And I'm now going to open what is known as the MCACA website. This is the website of the Ministry of Corporate Affairs. You can actually register here with the login and all. Okay, register here. This is, I think, the V2 or V3 or whatever nonsense, whatever it is. It has something called ebook, right? See, we can have darshan of Modi ji. One sec, we go back. Go to Acts, the Companies Act. Now when you go there, can you see the Companies Act, BARE Act? This is called the BARE Act, BARE Act. There is SIF section, only section. This is, so everybody understand? Now I'm going to go to Management and Administration. Okay, now under Management and Administration, the sections are displayed. So I'm going to go down, down, down till I come to Ordinary and Special Resolutions. Now I have come to Ordinary and Special. This is the section. This is the section. Let us see. A resolution shall be a special resolution when the intention to propose it as a special resolution has been specified, the notice has been given, the votes cast in favor of the resolution, the votes cast in favor of the resolution, the votes, if any, cast against the resolution. Hey, this is not 3/4. Don't argue that it is 3/4. Please understand the difference. So 2/3 is out. Even if you argue this 3 times is nothing but 3/4, it is not. The votes cast in favor shall be not less than 3 times the number of votes cast, if any, against. If any. For example, at a meeting, 5 people are attending. 5 people are attending, right? 5 people are attending. 1 person against, 1 person neutral, 1 person against, 1 person neutral, 3 for. Have I passed a special resolution? 5 people are there. 5 people are attending, voting by show of hands. No problem. No poll was demanded. 1 voted against, 1 neutral, 3 for. Have I passed a special resolution? Yes. Yes. How? The number of votes cast against is 1. Neutral not to be counted at all. Neutral is not negative vote. Neutral is neutral. It's not to be included. So you have 1 vote cast against into 3. It is 3 votes for. Special resolution passed. Are you able to understand what I'm saying? So where is the 3/4 here? So more than 75% or no. So please, this is the BARE Act. Why I did this exercise for you today now? Your topics, the topics that we are discussing are also there. Very much there. You can go on. The topic we are now discussing is also here. Okay, so my suggestion as intelligent students, do not only rely on the book. Some book. Board of Studies material is good. It is very good. But the clinch and one beauty of the Board of Studies material is most of the time they repeat the section there. So sections are almost Board of Studies itself is a BARE Act only. But the point I'm making is you should also know how to access the BARE Act. Not only for this topic, boss. Sorry, since I'm doing this, I'll do it. You will notice that in my, in my page, in my home page or whatever you call it in Google, I have also allow me to do this again. This is the Income Tax Department ka site where I will see the sections. So I always refer to the Bare Act. Because see, the Bare Act is what the Constitution, the Parliament has told us. So that Bare Act needs to be accessed. Don't be afraid to read the Bare Act. Okay. Then, if you have some doubts, for example, when I read CE, whenever my client comes to me with an issue, I take the facts, I keep it on the table, read the facts, rewrite it, prepare a diagram. Then I read the section. Relevant, I identify which are all the relevant sections, say 5, 6 sections. I read it again with a fresh mind. Because I am practicing for 35 years doesn't mean that I know everything. I might have forgotten some silly things, small things. So read again with unmilitam, open eyes. Okay, both eyes are open. Then, and the mind is open, I read it. Then I try to jot down the issues and all. Then, and only then, I will start providing a solution to my client. Okay, this is the suggestion I would like to give to all of you, because remember, income tax is also a law, and as such it should be approached like a law. Okay, not mechanically from some textbook you mug up and vomit. You should know the Bare Act. What is it that the law says? Then of course I may refer to a treatise, or I may refer to Vinod K. Singhaniaji's book, which is according to me a good book. I refer to it, whatever. I might refer to articles. Then I might talk to a couple of peers, say, hey, this is what it is. What are you doing here? These come later, but first you do this exercise. So kindly understand what is special resolution. In future, don't make a similar answer. Okay. I know this is out of syllabus question. I am wasting your time, but what to do? Okay. So suppose you become a CFO of a company, and a fool like me comes and you argue that it is special resolution is 2/3 or 3/4. At that point in time, he would take the Bare Act and show you, and slightly loss of face will be there in front of your MD or others. That is why these small things and all, be thorough. Don't get caught. If somebody wants to put you down, this is a wonderful way of doing it. And showing to the people I see is that these are all youngsters, they don't know. Like that, if they want to make your point, this is one way of stupidly doing it, but they'll do it. There are senior people who do this, who would snub you, who would try to put you down. So don't give them that opportunity to do it. Okay? Be so thorough in the topics that the senior would be, oh, really, you're good. Very good. Please come. They will respect you. And then they will start entrusting better and more important work to you. And that is how you will start growing in the organization. Okay. Chalo. A person above 70 years may be appointed by passing a special resolution. If special resolution is not passed, but simple majority is obtained, then appointment can be made with approval of CG in appropriate cases. No problem. So think about my example. I am proposing a resolution. Same 5 fellows are attending. MD is 75 years old. Resolution to appoint him. Now, the number of votes here, 1 fellow against. 1 fellow still neutral. But now, 2 fellows become neutral. 2 fellows are neutral. They are worried. Better not get into this difficult thing. So, 1 fellow dead against. That old man should not be like that. 2 are neutral. Now, 2 have consented. 2 are consenting. Now, have I passed the special resolution? No. But the resolution was put to vote, and when we counted, though special resolution was not passed, simple majority obtained, meaning number of votes cast in favor is more than the number of votes cast against. It exceeds. So 2 more than 1. Therefore, are you able to understand? The sequence should be the same. I propose the resolution as a special resolution. Put it to vote. Voting is done. I'm not able to get special majority. I'm not able to get 3 times the number of votes cast against. But I'm able to get simple majority, meaning exceed. Then the appointment can be made with the approval of central government in appropriate cases. Okay? Good. Now, we have Janvi's question. Even I'm having a slight problem there. See, A is appointed on August 2020 for 5 years. And on September 21, he is liable for retirement by rotation and is reappointed. So the 5-year period will be from August 20 or from September 21. This is a tricky question. When you appointed him on August 20 for 5 years, he again comes up before the person. Now, you can't appoint him for another 5 years. So what you do is you appoint him for the balance period of his office till he completes 5 years. So, and ideally try to push him in the not so liable category. Ideally try to put this type of a tricky person in the not so liable category. Don't bring him here and do it. But if you have no other go and he has to retire, then at the next AGM, he will retire. Now you reappoint him. But you will reappoint him only for the balance 5 years. So that at the end of that period, he will be appointed for another 5 years. Or before the expiry, one before, you can again reappoint him. But you cannot appoint him. See, two conditions now. Reappointment shall not be made earlier than 1 year before the expiry. His term is expiring 5 years later. So he is retiring by rotation. In which case, ideally, do not push him into the liable category. That is my first advice. Whole-time directors, MD, please try to bring them out of that category. This is the practical advice I'll give you. But if still for the sake of argument or for the sake of theoretical knowledge, you are asking me this question, what happens if he is retiring, what to do? Then reappoint him. At the AGM, he'll retire, and you reappoint him. But only for the remaining period of office, not for another 5 years. See, this is the best answer I can give you, madam. Okay. Hope you are satisfied with my answer. But again, I'm telling you, while identifying people not so liable category, you bring these people. Ideally, bring this guy. Suppose you have another guy who is going to go, you push him then. Don't put this guy in there. Push him. You anyway have one, not the remaining, other than not less than 2/3, the remaining category is there. Bring this guy into that category. Take somebody else out who is not. Why bring this guy there? No. But if you are going to, no, sir, don't tell all this nonsense. He is retiring at that next AGM. What to do? I have given you the answer. Okay. Further disqualifications for MD, the person should not be an undischarged insolvent. Your internet connection unstable. I'm sure you are having a problem. Let's see. The person should not an undischarged insolvent or at any time been adjudged as an insolvent. Okay? Or at any time been adjudged as at any time been adjudicated. Are you able to understand? See, whoever applies, he will be adjudged. Now, even if in his lifetime, once he has been adjudged as an insolvent, forever he is disqualified from being appointed as MD, WTD or manager. Which is why, but of course, if he is discharging himself also, there is no point. Today he might be an undischarged insolvent. Later on, he might discharge himself. But still, if he has at any time been adjudged as an insolvent, he cannot be a MD. Whereas for director, if it is discharged, even though he is adjudicated, if he is discharged, and at the point in time when we are appointing him, he is not an undischarged insolvent, then you can appoint him. But even though he is discharged, if he has been adjudged an insolvent any time in his life, he cannot be appointed. A person who has at any time suspended payment to his creditors or has at any time made a composition with them, meaning he has not become an insolvent, but he has called his creditors and legally he has applied to court, and the court has directed that he need not pay for another 3 years. 3 years later, he can start paying again. Or the court has approved that he need not pay the entire amount. Composition, he has compounded, meaning he was owing 4 crores to his creditors. He went to court and he made a composition. Court said, finally called the creditors and all settled and said, he will pay you 3 crore, release. But the minute he has made composition or suspended payment to his creditors, at any time in his life, he cannot be appointed as MD WTD manager. He can be appointed as a director, ordinary director, but not MD WTD manager. So the reason is simple. This is a gentleman whose own financial affairs are not in order. He is a man who is not able to handle his own financial affairs. Is he competent to handle the finances of a company? As well as, see, Adjudged as insolvent means, I explained this to you when we did directors. Now, see, who is an insolvent? A person who cannot pay his liabilities in full. If all the assets are sold and amount is realized, that amount is not enough to pay all his creditors. Such a person is called insolvent. Either he can apply to the courts and ask the court to declare him as insolvent, or the creditors can approach the court and file a petition. That is called application for declaring as insolvent. Once the court hears it, the petition goes through it, they will pass an order that is called adjudicating or adjudging as an insolvent. Once that order is passed, this gentleman will become insolvent. Meaning, after that, his signature will have no value. All his assets will be transferred to somebody called the assignee or receiver, who will then sell it, pay the creditors to the best extent, and then everything will be over. Then after that, the court may insist on another 10 years or 5 years, he cannot do anything. Then after that, he has to make an application again and declare himself to be discharged. So till such time, he is called undischarged. Okay, this is what I've already explained this to you. I hope I have now explained again for your benefit. So in both these cases, he is financially unstable. He is a gentleman who is not able to handle his own finances, right? Which is why, again, I'm sorry to be a boring today, but as a member of the Institute of Chartered Accountants of India, ensure that your financial affairs are above reproach. Okay, don't borrow too much. Don't borrow in excess of your capability. Of course, buy that costly car that you want to buy, so long as your salary or your income from profession is good enough to bear that EMI. You do, but don't borrow too much. Don't borrow beyond your means. Okay? Within the limit, yes, I'm not against borrowing, but don't borrow too much. You in your heart, you know what you can do, what you cannot. So financially be sound. If you have a problem, if you personally then entrust it to spouse or somebody who's having more sense and who will be able to handle it better. Because sometimes some people, they themselves don't know, they'll spend money, they won't even, but a chartered accountant cannot afford to be like that. Because, suppose a doctor is not healthy, however much he might prescribe, people will say, hey, he himself is not capable, how is he going to do? So similarly, our financial affairs also should be above reproach, and we should be clean, and we should have, ideally, we should not be owing money to people coming and shouting at our house and all. Should not happen. Okay. Credit cards, your CIBIL rating should be pretty high. 700, 800 plus it should be. Okay, then only for a chartered accountant, it should go 800 plus. Everything should be paid on the due date. See, this is all part of ethics. Don't think that is not. It's very much part of professional ethics. It is only when a person becomes indebted too much that they will become susceptible to, all sorts of temptation to get out of the difficulty. Then he'll say, sign this balance sheet. Then then the coercion starts. He signs the balance sheet. Are you able to understand how this happens? So the first step is desire. To have more than what you want. To have more than desire. That needs money. So how to earn that money? Do anything. That is how professional, unethical behavior starts. So you stop it at the flood itself. Don't allow it to continue. Control your expenses. Control your needs. Automatically think. Or earn more. Genuinely. Either this or that. Anyway. Good. So lastly, the operative word in these slides is at any time. At any time. That means lifetime. Once if it has happened, gone, MD. Of course, don't worry, for this dosham also there is a pariharam. We will see that, but company cannot appoint him if he has been adjudged as insolvent anytime, whatever, anytime suspended, no. Similarly, at any time, been convicted by a court of an offense and sentenced for a period of more than 6 months. So you remember that? There we said he is convicted, but imprisonment, if it is more than 6 months, then he is disqualified to be a director. But he can be appointed 5 years from the expiry of the date of expiry of the sentence For 5 years, the disqualification will be there. After 5 years, he can be appointed as a director. But MD, no. If he has at any time been convicted by a court of an offense and sentenced for a period of more than 6 months, then he cannot be appointed as MD, WTD, M. He can be appointed as a director after 5 years from the expiry of sentence. But as a MD, WTD, no. Okay. Unfortunately, that section, the wording is like, at any time being convicted by a court of an offense and sentenced for a period of more than 6 months. Sentenced for what? So the word imprisonment is not there. I'm adding it in my own slide. We assume, but you cannot assume. What is that sentence? What is that punishment? Sentence means punishment. What is that punishment? It has to be imprisonment, because for a period of more than 6 months is there. Now that means imprisonment only. But unfortunately, the wording is not. If you want, don't believe me, check the Bar Act. Okay, check the Bar Act. It is not there. I'm supplying the words for the benefit. See, this is the type of loose drafting that I hate in the 2013 Act. I'm sorry to use the word. I am every right to comment about the law. I'm a practicing chartered accountant. I have written a book on company law. I'm an author. And I have the right to say that the Companies Act 2013 loose drafting. See, the word I will use is ashraddha. Shraddha means care, taking care. Ashraddha is not taking care, casual approach. That you can see a lot in the 2013 Act. Okay, I don't know why. A little more concentration, they could have done it correctly. No. So, if he has been at any time convicted by a court of an offense and sentenced for a period of more than 6 months, whatever that sentence may be, I'm assuming it's imprisonment, sentenced to stand on the bench for 6 months, whatever that it is, if he has been convicted and sentenced for more than 6 months, out. Okay. Okay. Just to test our knowledge, can the following persons be appointed as MD, WTD, or M in any company? Just put A, B, C, D. So, A, what is your answer? Dr. Robert, who has a PhD from USA in genetic science, who is 20 years old. Young genius. Correct. A, no, less than 21. Mr. Simon, who has been adjudged as an insolvent. At any time is the operative word. See, once he is adjudged as an insolvent, Simon will become an undischarged insolvent. Later on, he may be discharged. So, but even if he is discharged, he cannot be appointed as MD, WTD, or M. B, no. Adjourned insolvent. Adjudged as an insolvent. Adjudged. 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 To adjourn means to have it on another day. That's what adjourn means. Peter, who was convicted for an offense under the Foreign Exchange Management Act 1999 and sentenced for 1 year, more than 6 months. So, no. But if Peter had been sentenced for 3 months, 6 months. So, 3 months is okay. 6 months, they have put an artificial 6 months. You might think why I am laughing, but even one day if he has gone to jail or whatever. Anyway, even the worst people should be given a chance to reform and live a life. No? So they prescribe 6 months as the limit. If he's been convicted and sentenced for 6 months, above 6 months, 6 and above, no. But less than 6 months, 3 months allowed. Beautiful, Kaushikiji. How about Mr. Methuselah? who is 92 years old and still going strong. In fact, I met Mr. Methuselah. I told you, 90 years and still going strong. His name is Mr. I.M. Rao, Mallikarjun Rao. He's a mariner who sailed in the seas. And today, why I'm saying this to you, pray that you will all live like him and live long and earn well, enjoy, The prayer, that we tell in the afternoons, it says, Jivema Sarada Satam, Nandama Sarada Satam. That let's live for 100 years. Let us be joyful for 100 years. So this is what is the prayer that we give every day. One of the prayers that we chant is Jivema Sarada Satam, Nandama Sarada Satam. So let us live for 100 years and let us enjoy for 100 years. Yes, Methuselah can be appointed after passing a special resolution, or if a special is not passed, but a simple majority is obtained by getting the approval of special. Very good. Sriram gives comprehensive answers. All the answers are correct. Sentence for more than 6 months. Yes, if sentence would. Just be sure you add that if specialism is not passed, but a simple majority is obtained, he can be appointed by the approval of CEL. So this is how it is. Methuselah was the grandfather of a man called Noah, the Bible. His son was Lamech. And then you had, I think the other way. Methuselah was father of Noah, then Lamech. Now we come to Schedule 5. Friends, not easy to teach. Very, very lengthy. See, there are 4 parts. Within part 2 itself, you have 5 sections. All that is there. So I'm going to call for a small break because you people also will be very hungry and you will want to eat something. Okay, parantha or whatever you want to have. Go ahead. Time now is around 8:27. So let's look at 8:40 to 8:45. 8:40 ideally, but with little time because it's Sunday morning and you may not have had a breakfast. Okay, break till 8:40. A little bit benefit. Sir, break, sir. Mr. Ashok? Can I start? 1 second. Sorry. Yeah. Sorry, I was muted. Can I start? Okay, just I will share the screen. Sir, connectivity is good. Is it okay? Thank you. Welcome back from your well-deserved break. As I said, we are now moving on to the center of this topic, the crux, the important part. Like in the sandwich, there are two parts. In between, you have the nutrition. That is Schedule 5. So we saw the disqualifications suffered by MD. So you can appoint a person as director if he is not disqualified under 166, 164, 1 and 2. Then if you want to appoint as MD, WDDM, further you have to control these conditions. Then Schedule 5, further conditions are going to be put now. Are you able to understand? So before we go there, let me brief you on the background as usual. First of all, managerial remuneration is linked to profits, meaning in a year, whatever is the profit as computed under section 198, on that managerial personnel will be entitled to remuneration. It is fixed as a percentage. It is a percentage. We will be seeing that very shortly when I come to section 1, where there is adequate profit, no problem. If he is otherwise qualified to be appointed under Schedule 5 and you appoint him under Schedule 5, then in a year of adequate profit, you pay the percentage. The problem is, where there is no profit or inadequate profit, I still have to pay the salary. I still have to pay some minimum. See, nobody will do free service. See, for example, let us say that you are hired as a CFO of a company. Now, you are entitled to salary package, you will be negotiating it, right? So somewhere if at the end of the year, the company comes back and tells you, hey, there is no profit this year, therefore no salary, will you accept it? No. So same thing applies to the whole-time directors, right? MD, they have also spent the time there, they have invested their energy, so they're entitled to something. How to pay? That is why Schedule 5. Where there is adequate profit, I don't need anybody's permission, boss. I can simply pay and go. But where there is inadequate profit, they are saying, if you appoint the managerial personnel through Schedule 5 route, for 5 years you appoint him in Schedule 5, then whatever may be the situation, you can pay them remuneration. Where there is adequate profit, as per the law, percentage. Where there is inadequate profit, then they have given you some limits based on effective capital. To that extent, you can pay them salary, etc. Minimum salary can be paid. Minimum remuneration can be paid to whole-time and part-time directors. Are you able to understand? That is why Schedule 5 is very, very important. Because if you don't go through Schedule 5, in a year of no profit or inadequate profit, we cannot pay managerial remuneration. That is why Schedule 5. Earlier, it was called Schedule 13 of the Companies Act 1946. Almost the same. Almost means 60% same, but some are different conditions. So this is Schedule 5. So again, managerial remuneration is linked to profit. Normally, you can appoint him for 5 years. You don't have to appoint him under Schedule 5, but year of profit, no problem. Year of loss, what happens? You cannot pay him anything. Are you able to understand? Or you have to go to central government for approval and all. But what they are saying, if you appoint him through Schedule 5, then even when there is inadequate profit or no profit, as per the table given in Schedule 5, you can pay them. This is the benefit of Schedule 5. So for that, this gentleman or lady should satisfy the conditions of part 1. Part 1 gives elaborate conditions to be fulfilled for the appointment of an MD, WTD or M without the approval of central government. So if he is satisfying these conditions, you can just pass a board resolution, appoint him under Schedule 5. That's it. Enjoy. In a year of adequate profit, pay him. In an year of inadequate profit, as per the table, you pay him. Then, even for this, there are certain exceptions. Meaning, this Section 2 remuneration is sometimes very less. So, there are certain companies we can pay more. Exceptions are there. Also, the word remuneration includes commission, fees, anything, perquisites, everything. But certain perquisites are not included in remuneration, given in Section 5. Section 4, which is nothing. You will see that that's not a big thing. Otherwise, all the perquisites mentioned in Income Tax Act are very much part of remuneration. Okay? Very much part of remuneration. So while calculating remuneration, you will calculate perquisites also. All told, you should take the amount and then compare it with the profit. This is, you see, that is why I said some of you might have studied this for auditing, or if you are already working in a firm, you are auditing a company or a large company, you might have done this calculation for audit so that you will restrict it and inform them and things like that. Lastly, Section 5 talks about remuneration from 2 companies. Meaning, question is, later on, we are going to see that question. Can a person be MD in 2 companies? Yes, he can. 2 and not more than 2. Certain conditions are there, but he can be in 2. So, where is a MD in 2 companies? How do I pay remuneration to him? How much remuneration is he eligible from these 2 companies? That is discussed in Section 5. So, Part 1 talks about conditions to be fulfilled. Then Part 2 talks about the remuneration itself. Section 1, where there is adequate profit. 2, where there is no profit or inadequate profit. 3, some exceptions. 4, perquisites not included. 5, procedure where he is getting remuneration from 2 companies. Part 3 gives certain procedural aspects. 3 procedures are there. Not a big thing. Part 4, power of central government to exempt companies. That's given in Part 4. As an escape wall. That's why I said now, for all dosham, there is a pariharam. Where for any dosha, there is a pariharam. So like that. So if you have a problem, you go to central government and say, boss, I don't know what to do. The central government has the power to exempt any company or class of companies. Yeah. Can one person be MD in more than 1 company? Yes, he can. 2. He can be in 2 and not more than 2 companies. We will see that in this topic. Later, we will see what is the condition. Where a person is already MD in 1 company, to appoint him as MD in another company, certain procedures are to be followed. If you follow that, a person can be MD or M in more than 1 company. Preconditions for appointment of MD, WTD or M. The appointment shall be subject to the provisions of Section 197 and Schedule 5. So 197 is the mother section, which links to Schedule 5. You will find that 197 talks about Schedule 5. Again, Schedule 5 talks about 197. It is a closed loop. Okay, you appoint him through Schedule 5, still again you will be in 197 framework only. So ideally, what you should do, when you are appointing the MD, WTD or MD or WTD, manager, you will never appoint him. See, after all, if you are going to go through all this trouble, as well call him managing director and make him a director. Why you want to have manager? Seriously. Who wants to be manager? Would you like that? See, manager is a low-level designation, Baba. In any organization, you have manager, assistant manager, then manager, like that, deputy manager, manager finance. So, a low-level position. So, that why you will do that? You will as well call yourself MD, managing director. So, whatever it is, this appointment, if it is done through Schedule 5, then you can enjoy the benefits. So, at the beginning itself, you appoint through Schedule 5 for 5 years. So that in the course of 5 years, if there is a profit, no problem. There is no profit, Schedule 5 will help you, so on and so forth. For that, he should satisfy the conditions. You're going to see. We saw disqualifications 164. Then we saw disqualification for MD as given in section 197. That is one thing. Now we are going to see disqualification for appointment of Schedule 5. If these disqualifications are there, then he cannot be appointed under Schedule 5. He can be appointed under 187, but then he can be paid only in a year of profit. He cannot be paid remuneration in a year of loss or inadequate profit. That is all. If he is disqualified under Schedule 5, then, sorry, in a year of loss or inadequate profit, I can't help you. But if you are eligible under Schedule 5, I will appoint you under Schedule 5. Even in a year of loss or inadequate profit, I can pay you remuneration. Some amount, not too much, something. Okay, to keep body and soul together, we can pay you something. Otherwise, even that I cannot give you, sir. Sorry. Okay. Approval by a resolution at the next general meeting. Normally, the terms and conditions of appointment and remuneration payable shall be approved by the board of directors at a meeting. Board resolution is enough. So you appoint him. The board resolution is enough. Terms and conditions are approved by the board. But once you do this appointment should be approved by a resolution at the next general meeting of the company. Suppose such appointment is at variance with the conditions specified in Part 1 of Schedule 5. Then approval of central government shall be obtained by applying in form number MR2. That's why I said now, if I'm repeating it, I'm sorry, but I'll tell it one more time. For every dosha, there is a parihara. Means there is a solution. Pariharam is solution. Pariharam is overcoming. Something that you can do to overcome it. See, when somebody brings the horoscope and we look at it and then we say this planet is not good, and then finally they keep asking, sir, I want to pass the exam, sir, tell me how to do it. Okay, Buddha is getting into a trap. Saturn is caught between Saturn and Rahu. Ketu is also there. So, fourth place gone. How to protect you now? So then we start giving some suggestions. You do this, you go to, on Saturday, you go to Sunny temple, you do some puja. That we say. So like that. This fellow is not eligible to be appointed under Part 1 of Schedule 5. What to do? Then, come. We'll give you another route. Apply in form number. But then, now approval or not approval is the discretion of the central government. Your top notch will now go to the central government. Central government will control you. But if they are satisfied, okay, exceptional case, let's give him. So they might approve that. Discretion. Who will central government here is regional director. So regional director has to help you. Why should he help you? So you should be worthy of that. He see to it that you are worthy of that. That's all. And then he will approve it and give it back to you. Come and enjoy. All this, see this form number MR2 and all, generally we chartered accountants do not get into this. That is why, maybe they are removing this from the syllabus itself and making it self-paced. Maybe they feel, see, this particular aspect of completely done by company secretaries. So maybe the institute feels this knowledge is redundant for a chartered accountant. But I would humbly submit that, don't be ignorant of it. That is why they put it in self-paced, so that you read it and be aware of it. Otherwise, in a board meeting, they ask, you can't plead total ignorance of all this. Sorry, otherwise the company said, see, already the company secretaries will be bullshitting a lot. Bullshit, they'll give. So, see, if you're not thorough with the subject, then how can you even correct him? Then you will have to agree to what all he says. Sometimes it will be bullshit. I'm sorry with you. I'm also a company secretary. Okay, I'm an All India rank holder in both inter and final, ACA, CA and CS. Company secretary also, I'm a rank holder. All India 4th, All India 10th. That is why I selected company law as my specialization subject and I'm teaching company law. Point is not that. Point is, they will tell you anything. Then wouldn't we have to point out the law and show him, Baba, the section says like this, rules are saying like this. Where do you get this? No, sir, like this, sir, like that, sir. Finally, he will say, whatever it is, sir, I will go to regional director and solve it. That is because the act has a lot of escape valve like this. You can go to central government and obtain the approval. And you can appoint him, even though his appointment is at variance with the conditions of Part 1 of Schedule 5. Please remember this. So Part 1 Schedule 5, ideally you satisfy. If you do not satisfy, you have an escape valve. You have an alternate path. Go to central government, file form 1, apply in form 1, MR2, hire a good company secretary, get it done, go. The notice convening board or general meeting for considering such appointment shall include the terms and conditions of such appointment, remuneration payable, and such other matters, including interest of a director or directors in such appointment, if any. Interest means, for example, when you are appointing, see in our example, Vijay Adekar, Vimala Vimal, when you are appointing Vimala Adekar, Vijay and Vimala are interested, na? Why? Because their son is getting appointed, boss. Their son is getting appointed. Therefore, you have to disclose that. The person being appointed is the son of the MD and the another whole-time director, Vimala Adekar. You have to disclose it. Nothing wrong. No crime. But disclose. People should know. The MD's son is being appointed. Nothing wrong. If Vimala Adekar has the capability, why not? Okay, I'm not trying to say it is wrong. There are many second-generation entrepreneurs who have done exceedingly well. With notable examples like Kumar Mangalam Birla, Mukesh Ambani. There are other examples also. 100 examples are there of second generationers who have developed the business beyond the first generation and done well. So we appoint him at the board meeting. Then we have to get the approval by the passing a resolution at the next general meeting. Am I correct? What happens if the appointment of MD, WTD or M is not approved by the company at a general meeting? Quite possible now. So his appointment will cease to be valid from the date of the general meeting. Means he would be appointed in say July. For example, he is appointed in June, whatever. The AGM of the company will come in September, let us say. From June to September, he would have been acting as MD. At that meeting, the members do not approve his appointment. Now, his appointment will cease to be valid from the date of the general meeting where he was not approved. How about acts done by him before his appointment was so disapproved? Any act done by him before such a disapproval shall not be deemed to be invalid. Meaning, two negatives are used. Not to be deemed to be invalid, shall be valid. So, I don't know why they use the word this, but because he was not approved doesn't mean anything done by him before that meeting was invalid. Otherwise, what will happen? This man would have signed checks, he would have signed contracts, he would have done so many things. All that would become invalid or void, and the other parties will be affected. Therefore, they say, till the date of general meeting, whatever this gentleman did, valid. Beyond that, not valid. He should not say. Which is why what they will do now, this fellow is obviously a bad chala, an unqualified fellow. What he will do, that meeting is coming now. Before that, he will do everything and run away. All the signing, etc. will happen before that date and run away. So long as there is no malafide or fraudulent intention, he can get away with it. Okay. The provisions of subsections 2, 4 and 5 of section 196 pertaining to tenure of appointment of MD, WTD, M, procedure for appointment and consequences of non-approval by shareholders do not apply to government companies. So we saw this. What all we saw regarding tenure of appointment, procedure for appointment, and in case it is not approved, etc. This whole section, these three sections, 2, 4 and 5, do not apply to MD, WTD or M appointment in a government company. Government company exempt. The provisions of subsections 4 and 5 of section 196 pertaining to procedure for appointment of MD and WTD or M and consequences of non-approval by shareholders do not apply to private companies. So, major exception. No tenure. Okay. And nothing. All that will not apply to private companies. Procedure and all, no. You can appoint him in. Okay. So this is with effect from 5th June 2015. Which is why there is no ceiling limit on managerial remuneration for private companies. Private company, you can do anything you want. Only for public companies, you have to see the limits. Now we define remuneration. Remuneration was already defined for you in 2 subsection 78. means any money or its equivalent given or passed to any person for services rendered by him and includes perquisites as defined under the Income Tax Act 1961. 17 of the Income Tax Act, you have to go. What all defined there is a perquisite here. So any perquisite included under Income Tax Act, as defined in Income Tax Act, is a perquisite for remuneration calculation. So you have to compute his income, salary income, including perquisites. Then if you're paying him any fees, etc., that also should be considered. Any or equivalent of money given, everything should be considered. And the total amount you should take and keep in one side. Then you should compute the profit under section 198. We'll see that. Then that number you should take and compute 5% or 10%. And then see which is more. If 5% is more, no problem, enjoy. If 5% is less, this is more, then inadequate profit. Then you have to go under Schedule 5, Section 2, where there is no profit or inadequate profit. Okay. Now we come to another interesting point. Remuneration determined under Section 197 and Schedule 5 shall be inclusive of remuneration payable to him for services rendered by him in any other capacity. For example, Mr. A is a director. As a director, you are paying him sitting fees, you are giving him some remuneration. That is okay. In addition to that, you are paying him a huge amount as consulting fees. For what you are paying? Generally consulting. Is he professionally qualified? Does he have any professional qualification? No, sir. He is a school dropout. He never went to college also. After completing school, he joined the company. Our company, his father's company, and he is there. He is see. After all, everybody need not be highly educated to become a MD. Education is 100%. Director, MD, and all no education qualification. Even school dropout can become. In fact, school dropouts are possibly better qualified than chartered accountants and IIT, IIM and all. Why? Because so much left brain work has happened there. So much path driven, so much straightforward thinking that they have no imagination to become entrepreneurs. Whereas this guy who dropped out of 10th standard or 12th standard, fellow has so much innovation, fellow has so much ideas, and education has not spoiled him. But that's all fine. But if you want to pay him remuneration in any other capacity and he doesn't have any requisite qualification for it or knowledge for it, then you cannot pay him the capacity. I mean, whatever you pay him in any other capacity will be included for limits, remuneration for calculating limits. But exception. Any remuneration for services rendered by any such director in other capacity shall not be so included if the services rendered are of a professional nature. Please be careful. Professional services means that gentleman or lady should be professionally qualified or should be member of a known recognized profession. You do whatever you want, you can't get out of that. Okay? Professional. For example, marketing is not a profession. There are no marketing. Though he might say, I'm a professional in marketing. Marketing, no. Are you able to understand? Marketing is not a profession. Accounting is a profession. But how do I say I'm a professional? By becoming a member of the Institute of Chartered Accountants of India. That is the only way. Okay? Only that is professional. You can say I'm an accountant. Accountant is not a professional. Member of the Institute of Chartered Accountants of India is a professional. Okay? Like that company secretary, like that doctor, professional. Medical. He is a member of the Indian. He is licensed by the Indian Medical Council, and he is a professional. Engineers, yes, professional. Okay, professional allowed. Okay, possessing the necessary qualification, he becomes a member of profession. But engineer, dicey, but professional. Advocates are professionals. No doubt about it. They are professionals. So like that, few people only will come in that category. You can't bring everybody. Astrologers, professional. Vastu consultant, professional. Architect, professional. Are you able to understand? Interior designer, professional. But other than this, if you want to take up something, earlier, the central government had given a list of professions recognized. Right? Now that list is not there, you have to understand it in the general meaning. And the director possesses the requisite qualification for the practice of the profession in the opinion of the board. Okay. Or the nomination and remuneration committee, as the case may be. See, HR, not a profession. I've been struggling to make these guys understand. You guys want to become professional, then form an institute, form your body, let the body give recognition, let the body conduct exams compulsorily. Then if they clear the exam, then they become such thing, then you become recognized. See, today, how do you get your brand and premium as when you go to the job market, you are getting a brand straight away. The CA Institute brand is just you are getting into it. The minute you qualify, you are getting access to one of the most powerful brands in accounting in the world. Okay, for your information, the ICAI is the second largest professional body of accountants in the world, second only to the AICPA, the American Institute of Certified Public Accountants. That is the largest, in the world. We, the Institute of Chartered Accountants of India and its members, we are the second largest in the world accounting body in the world. That is why, when we are not signing in on IFRS and all, they get really upset because we are not willing to adopt. We still want to have our own Ind AS and all that. Good. I'm not against that, whatever it is. So we refuse to become signatory to IFRS. Though we are members on the IFRS committee, we are not adopting IFRS directly. Instead, we have bought it through our own Ind AS, which is okay. We are allowed to do that. Anyway, point I'm trying to make is membership to a professional body. Okay. Again, they said whether it is his requisite qualification in the opinion of the board of the nomination and remuneration committee. Okay, is all what you have to see. See, for example, I am a qualified astrologer, but I am not from any recognized university, but I do have a certificate from an institution that says I am qualified. Now, if the remuneration committee is happy, then they can hire me as an astrologer. I am a director. I am entitled to remuneration as a director. Plus, as an astrologer, I can also give astrological predictions. And further, they can pay me. And that amount will not be included in managerial remuneration because it is rendered in professional nature. Services rendered in a professional nature will not be included for remuneration, managerial remuneration. Okay. I think the topic is a little boring, no doubt, and I'm not having any questions here. Are you all there? Is somebody here? Are we awake? Because the last comment was from Kaushiki ji. For WTD, you told only one company, then she herself says, okay. No. But that's a very good point you're making. Whole-time director, you can be in only one company. How can you be in two companies? That is why MD, for appointment in one more company, they will, there are some conditions and procedures. To satisfy that, you can be MD. There is you can say there is an exception to the general rule. Okay. Exception. Even I agree with you. How can you be full-time handling two companies? This question is asked. That is why when you see the condition, you will understand. Okay. You see the condition, you will understand. Can a Hindu have two wives? Muslim can have four. Okay. Hindu can not have in fact, other than Muslim, nobody can have more than one wife contemporaneously. There are only one wife. If you have two wives, it's called bigamy. Okay. But how it is possible then? Who can object the first wife? Now, see, if she is keeping quiet, then that's it. That is all. That is on that basis only the second wife will come into the existence. Otherwise, you cannot have second wife. Whatever you say, the marriage is not valid marriage. Okay. Yes, in Andhra Pradesh, the marriage is not valid, but the children are recognized, which is good. Which is good because why should the children suffer for the illegitimacy of the marriage? So they say the children born out of wedlock still are entitled to a share of the biological father's or mother's wealth. Okay, so this is a good decision. Andhra Pradesh High Court, now law. Even across India, it is now the law. Illegitimate children are entitled to a share, but the marriage is not, the wife is not wife, but children are children. Provided biologically, you have to prove that there's a DNA match there. Otherwise, everybody will come and claim I'm so and so son like that. So, DNA proof is the only proof. Based on that, if he shows I am, DNA proof is there, genetic match is there, parentage is proved, then share is there for information. So 2 wives and all is bigamy. It is called bigamy. It is a criminal offense. But complaint can be given only by the affected party. The affected party is keeping quiet. No problem. Enjoy. Okay. Sometimes, I'm giving you, I think, information that you do not need. But what to do? Just to keep you awake, as Kaushiki says, and to keep you interested in the topic. Chalo. We now enter Schedule 5. Okay. We now enter Schedule 5. Welcome. Let me take you into the schedule and show you the parts. I already showed you the broad sketch of how it looks. Okay. So I'm now taking you to part 1 of Schedule 5, which are conditions to be fulfilled for the appointment of a MD, whole-time director or manager without the approval of central government. So once he satisfies this, you appoint him in the board resolution under Schedule 5. So we will say, resolve that subject to the provisions of section 197, 196, 197, 198, Schedule 5 and other applicable provisions of the Companies Act 2013. Mr. So-and-so be and is hereby appointed as managing director of the company to hold office for a period of 5 years upon the terms and conditions more fully set out in the agreement entered into between the company and the said managing director annexed to this resolution. That's all. Then the agreement is there. The agreement becomes part and parcel of the resolution. The terms and conditions, everything becomes part and parcel of the resolution. Okay. I've given you an example of a resolution passed under Schedule 5. You can, once you pass the resolution, board resolution, that's it. Okay. File MJD 14 and within 30 days, enjoy. Next GA general meeting, see to it that the appointment is approved. That's all. You are in business for 5 years, pay him either way, either from based on salary, based on profit, or as per the part 2. We'll see that. I'm sorry, part 1, part 2, section 2. Chalo. No person, now we are going to see the conditions. So you have to satisfy these conditions. No person shall be eligible for appointment as managing or whole-time director or manager. From now on, we'll call it as managerial personnel. MD, WTD, M together called managerial personnel of a company unless he satisfies the following conditions. Namely, 1. First condition. He has not been sentenced to imprisonment for any period or to a fine exceeding 1,000 rupees for the conviction of an offence under any of the following acts. So earlier we were talking only about offence committed and sentenced to imprisonment. That too, not less than 6 months. Not less than 6 months. Now we are making it even more stringent. He has already cleared that and come here. Now we are asking, any economic offences have you committed? So these are all economic offences. And he might not have been imprisoned. Even fine exceeding 1,000 rupees gone. And imprisonment for any period. Under any of these laws, even if for 2 days he has gone to jail, gone. Sentenced to imprisonment for any period. Okay. Or to a fine exceeding 1,000 rupees. Friends, be careful. Sometimes, in the case of fraud and all, when they receive a complaint from depositors, etc., they'll be a little more cautious. Sometimes, based on the complaint, the police will come and arrest because that will be a 420 complaint, section 420 of the Indian Penal Code, cheating. So cheating, straight away it's cognizable. They can come and catch you and go. Then bail may or may not be granted. But first you put in jail. So even for 2 days, if he's there, that is not sentenced. That is only remand. Then he'll come out on bail. Then the case will go on. Finally, the order will be passed. That is called sentence. Once that sentencing happens and he is imprisoned for even 6 months or 3 months or 1 day, he is out. He cannot be appointed as MD under Schedule 5. But if it is less than 6 months, he can be appointed as MD. because sentence to imprisonment for less than 6 months allowed for any offense. But he cannot be appointed under Schedule 5 because he has been imprisoned even for 2 days, he cannot come here under any of these laws, specific laws. For example, the Indian Stamp Act. The Central Excise Act is no longer there. It has been replaced by the Goods and Services Tax. But there may be some old offenses. For that, they are keeping it open. The IDRA, again, has been repealed, but there may be some old offenses. Prevention of Food Adulteration Act, very much a very Essential Commodities Act, Companies Act 2013, the law you are studying. The Securities Contract Regulation Act, it was in your syllabus, now it has been removed. It's not in your syllabus. Wealth Tax Act, again, redundant. Income Tax Act 1961, Customs Act 1962, Competition Act, it's in your syllabus. FEMA, very much in your syllabus. Sick Companies Act, it has been repealed by the Insolvency and Bankruptcy Code. SEBI, it's there in your syllabus. PMLA, Prevention of Foreign Trade Development Regulation Act, again, not in your syllabus. The Prevention of Money Laundering Act is in your syllabus. I think IBC, you already studied it, Insolvency and Bankruptcy Code. GST, I'm sure you're studying it in depth in indirect tax. And the Fugitive Economic Offenders Act 2018. Okay, thanks to great people like Nirav Modi, Choksi and all, we have this law now to bring them back to India and punish them. So if that person has been imprisoned under this law also, it is a offense. So question, should I remember all these laws? No. Just to keep in mind, they are giving you, usually they will not test you on this. They will say that he has been convicted, but then broadly you can remember this now. It's not a big deal. Most of it is known to you, most of it you are studying. So this is condition A, sentence to imprisonment, even 1 day is out under any of these laws, or to a fine exceeding 1,000. Exceeding 1,000, so up to 1,000, no problem. 1,001 or 1,500 out. He cannot be appointed under Schedule 5. If it is less than 6 months and no imprisonment less than 6 months, then or fine, any amount, fine, he can be appointed as MD. He can be appointed as director. He can be appointed as MD. But, oh, I'm so sorry. If he has less than 6 months, he can be appointed as MD. Penalty he can be. But more than 6 months, so he can never be appointed as MD. Never. Even he can't come here. Forget it. He's out there. Straight away out. He cannot be appointed as MD. Forget Schedule 5. Which is why I always keep trying to compare this whole thing. 164, director disqualification. 196 for MD. Then you have Schedule 5. So it is like 3 hoops. I don't know if in those days there used to be circus. The tiger will jump through the hoop. You see, the tiger will jump through the hoop. The ringmaster will hold a big iron circle hoop, and the tiger will jump through it. Then he will hold a smaller circle, slightly smaller. Tiger will jump through it. Sometimes that smaller circle may have, sharp points, so that the tiger has to come through that without getting scratched. Tiger will come through. Then he will hold an even smaller hoop, but enough for the tiger to jump through, but small. Very difficult. Tiger has to really plan and jump. If that is the Schedule 5. These conditions are like the smallest hoop. The tiger may not be able to jump. Okay. So if it jumps 164 loop, can be director. If it jumps 196 loop, can be MD. If it jumps Schedule 5 also, then you can appoint him as MD under Schedule 5. Okay. So the conditions become more and more stringent as you go down. B, he had not been detained for any period under the COFE POSA, Conservation of Foreign Exchange and Prevention of Smuggling Activities Act. See, who can be detained under this COFE POSA? I'll tell you. Gentleman is coming from abroad. The customs authorities are there. Suddenly they say, sir, can you open your suitcase? I want to see. He's trying to go under green channel. They call him back and say, sir, please open your suitcase. He opens. gold is there, or foreign currency is there. Worst case, drugs. That is worst case. Foreign currency and gold, at least you have a chance. Drugs, something contraband. Immediately he'll be detained. The power is there with the customs and passport control authorities. Immediately he'll be put on arrest. Why? Because he'll be asked only 2 times or 3 times, sir, can you give us an explanation for this? If he's not able to give a valid explanation, no talking, straight away take him and put him inside 48 hours. He can be detained for 48. Within 48 hours, we have to do some third degree and make him reveal his sources, his whole network. Otherwise, we have to bring him up before the judge within 48 hours. And 48, then he can hire his advocate who will come, bail, he'll go out. Then again the case will go on. He will be sentenced under Cafe Posa, FEMA, whatever. Mostly Cafe Posa. Cafe Posa is specialized for smuggling. So any contraband is caught red-handed with in possession. Caught in possession, gone. Police officer or customs officer or passport control officer need not give any due process. Straight away put him on remand. And then you are using that time, that 48 hours is precious. You have to use it to question him in such a way that he answers. And he gives you more information about the whole ring. If he is not able to do that, then you have to bring him within before the expiry of 48 hours, he has to be produced before a magistrate. And who will then consider bail, whether to grant him bail or not. But minimum, the judge will say, bail will be taken up later. Now I'm confirming his arrest, send him back. Now it is confirmed arrest, but he is not yet sentenced. Then his lawyer will move for a bail petition, bail will be heard. Then they will say, we'll give him bail. Whatever. Bail means he can be free to move around, but he has to come to police station and sign and all that. Well, welcome to the world of the criminal now. All this is common for criminal elements, but for chartered accountants or potential members like you, these things should not even be thought of. Okay, where the central government has given its approval to the appointment of a person convicted or detained under subparagraph A or subparagraph B above, no further approval of the central government shall be necessary for the subsequent appointment of that person if he had not been so convicted or detained subsequent to such approval. First of all, understand one thing. Central government can remove the disqualifications. If the appointment is at variance with part 1, central government can remove. So in case you have been convicted under one of these offenses, you still have a chance. You can go to central government, fall at their feet and say, Anna, it has happened like this, you ignore it once, they can allow. Similarly, Cafe Posa detention, you can allow. So central government will consider, it's okay, what you did. You just smuggled gold, yeah, that is not a great fault. Come, we will approve the appointment. Okay. Once they approve the appointment, that approval is valid. Further, again and again, for every subsequent appointment, you need not go. Provided, in the meantime, this gentleman should not have again been convicted. What a character. Okay, imagine. So, Schedule 5 also talks about age. Should not be below the age of 21, 70. Same. Ditto here. I don't know why they are reproducing it. It is here. Okay. He is a resident of India. Resident, there are many definitions. When in FEMA, there is a definition, person resident in India. Of course, your Income Tax Act has a definition, resident, non-resident and all that. Here, they give you one more definition for residents. So, they are saying he should be a resident. So for the purpose of this schedule, resident in India includes a person who has been staying in India for a continuous period of not less than 12 months immediately preceding the date of his appointment as managerial personnel and he has come to stay for taking up employment or carrying on business. He is a resident. Okay. Idea is simple. Natural citizens like you and I, we are automatically resident because we would have stayed for more than 180 days, blah, blah. In addition to that, they are saying a foreigner can be treated as a resident in India if he has been staying in India for a continuous period of not less than 12 months. and he has come to India for taking up employment or carrying on business or vocation. Okay. So, a foreign national or an expat who has come to India for taking up employment, if he has already spent 12 months here, then you can appoint him. He is a resident of India. For residents alone, there is an exemption for SEZ companies. This condition regarding residents shall not apply to the companies in special economic zones, which you know very well. Okay. Why? Because in the case of many special economic zones, foreign nationals will become MDs. Because, see, after all, for the foreign company which has set up a unit in the SEZ in India, this is one of the operations. Please understand, they'll be having so many verticals across the world, in Africa, in Latin America, in India, in Europe. So each one would be headed by an MD, local head, country head. This fellow, so they may be sending Stephen or John from Canada or from US to take up the Indian company. So John or Stephen will come to India and take over as MD of the Indian company, in which 100% shares are held by the foreign group. Now, such a person, he will not be a resident, right? But if the company is a special economic zone, then this condition regarding residence is waived. Because even if he has not stayed for more than 12 months in the past, he can still be appointed under Schedule 5, provided that appointment is in a company in the special economic zone. But they also want to be careful. This is not to permit somebody to come without employment visa. So any non-resident shall enter India only after obtaining a proper employment visa. See, otherwise they will argue, I am approved under Schedule 5, your government has approved, therefore I don't need an employment visa. Approval under Schedule 5 is for a different purpose. It is to ensure that this Stephen or John will get remuneration even in a year of loss, right? But he has to produce employment visa from the concerned Indian mission or Indian embassy abroad. Okay. So the visa has to be obtained. That's all they are trying to do. See, one thing, while we want foreign money, foreign direct investment, we are also worried about terrorism. And we are worried about people, coming, who are companies formed, whose purpose is not to run business, but to act as a front for terrorist activities. They want to be careful about it. We finished part 1. 5 conditions are there: conviction and sentencing for imprisonment for any period, or fine exceeding 1,000, detention under coffee posa. These are all conditions if the person is incurred this disqualification, he cannot be appointed as MD under Schedule 5. Similarly, age criteria, residence with exception of SEZ. So this is part 1 of Schedule 5. Now we move on to part 2, right? Part 2 of Schedule 5. This is simple. Remuneration payable by companies having profits. The operative section is 197. A company having profits in a financial year may pay remuneration to a managerial person or persons or other director or directors not exceeding the limits specified in such section. I'm going to show you what that is. 197 gives limits for remuneration payable to MD, manager, full-time director, part-time directors. We're going to see what these limits are. Okay. So, in these sections, section 1, 2, 3, Schedule 5, the term or other director shall mean a non-executive director or an independent director. So, this is where we are linking with part-time director. They are saying remuneration payable to a managerial person or persons, which means MD, WDDM, or other director or directors. Other director or directors is including a non-executive director, part-time director, or an independent director. they are also included in this category. This is something you might be familiar with. This is not new. I'm sure maybe you studied it in auditing. Maybe, I don't know. If not, here we go. This is the ceiling limit for payment of remuneration to managerial personnel. So you have one whole-time director, WTD, or managing director only. So one MD or one WTD, if you are having only one, then that one MD or WTD can take 5% of the net profits. So there's only one, sirf ek MD, or maybe he's not called MD, he's called WTD, whole-time director. That one person is eligible to 5% of the net profits. Suppose there is more than one MD or WTD, then 10% of net profits for all taken together, meaning you in any combination you pay, but the total that you pay to MD or WTD together, more than one together, cannot exceed 10% of net profits. So I'm having only one MD, no WTD, then that one MD can get 5%, or only one WTD, no MD, then 5%. Where there are more than one MD or WTD. As in our example now, Adekar Industries, how many WTDs are? There's one MD along with two WTDs. So together, totally they are entitled to 10%. Individually, 5%. So how you split is one thing. One more thing is, can I exceed the cap? Can I pay more than 5%? Yes, provided there are more than one MD, you got 10% to split. Okay, we'll see it when we come to Adekar example. Now, suppose in addition to whole-time directors, you also have part-time directors, PTDs. All of them taken together when there is MD or WTD. See, company is already managed by MD or WTD, more than one or one. They are taking care. The part-time directors are coming and sitting in the board meeting and giving advice and going, good. For that, we can pay them 1% of net profits. See, this 1% of net profits for all part-time directors includes independent director also. So independent director, though normally he cannot get any other remuneration from the company, he is entitled to his fee by way of commission. 1%. See, this 1% is for all of them. Then that should be divided between them and paid. How you divide, that is your choice. Total amount payable to them shall not exceed 1% of net profits. Total. Suppose there are 3 independent directors and 2 non-executive directors, totally 5. All 5 of them together should take 1% together. How you will split it? That is put in. Okay, 1% of the net profits. Now you might say, sir, 1% is such a small amount. No. Check out the P&L of many big listed companies like Airtel, Reliance. Just check out Ashok Leyland. See, huge whopping figure. 1% of that is pretty high. These guys can be paid a fat fee per annum based on this 1%. But there are some companies which incurred losses or inadequate, in which case, sorry, part-time directors get nothing. No, they get something. We'll see that. When we come to Schedule 5, Part 2, Section 2, we'll talk about inadequate profit. Now, there, part-time directors, we give them some 12 lakhs or something we give. Share it. Okay. I'll talk about it when we come there. Okay, sir. All part-time directors, PTDs, taken together when there is no MD or WTD. Here is a peculiar company where the company day-to-day affairs are not managed by directors. Maybe it is managed by a high-powered employee board, executive board of employees, but not directors. The directors meet only once in a month. Example, part-time directors, none of them is whole-time, no MD. They meet, they listen to the whole story. They're all high consultants, extremely intelligent consultants. They immediately give solutions in the board meeting. The executive people, the executive directors, etc., they execute it. Like that, the company is being run and the company is made profit. Now, these all part-time directors, when there is no MD or WTD, taken together, they'll be entitled to 3% of the net profits. Taken together. Chalo, overall limit, however you split it, finally, Overall, 11% of net profits is the ceiling limit. Okay, 11. How do they get this 11? Very simple. When there is more than one MD or WTD, you can pay them all together 10%. Got it? 10. Where there is MD or WTD, all part-time directors together entitled to 1%. Am I correct? 1%. So 10 plus 1, 11. That is how the 11 is given. So where there is MD or WTD, more than one WTD, together you can pay them 10%. Plus part-time directors are entitled to 1%. So total 11. Okay. Maybe the way I've written is wrong. Company can have only, okay, why not? Oh, yeah. Sir, in the provisions telling 10% more than one MD or WD. Yeah, more than one MD. For example, we have joint managing director. Yeah, more than two brothers are there, both will be MD. So they will say joint managing director. See, in Tamil Nadu, we had joint chief ministers. Two people were chief minister. One was EPS and we had OPS. Together they became two chief ministers. Joint chief minister. Joint. You can have JMD, joint managing director. Especially father will have two sons. Gali. Two sons are dangerous. One son is better. One son, one daughter better. Two sons, business empire gone. I'm not telling it is wrong, but I'm saying both will have ego now. So why he should be MD? I can be MD. So he is elder brother, younger brother, so okay, Baba, he is elder brother, he will be MD. You are JMD, like that. They will tell. Okay, I'm joint managing director. Sir, MD is only designation, Baba. When I conduct a leadership workshop, I keep telling them general manager is a designation. But leadership is a role. You should take charge. You should take decision. You should become accountable for your actions. When you do that, you are automatically a managing director or leader, even without the designation. Okay. So I hope answered, sir. There can be more than one MD. Enjoy. You can have more than one MD. So now you want to exceed this overall ceiling limit. Exceeding the overall ceiling limit means 11% you want to pay more. 1 year you want to pay more. Then the company in general meeting may authorize the payment of remuneration exceeding 11%, subject to the provisions of Schedule. So please understand, if the company should approve them in general meeting, then the appointment should be made under Schedule 5. So if you are making the appointment under Schedule 5, you can exceed 11%. Okay. Please understand, this is possible only when there is a profit. Suppose there is no profit, sir, you can pay 15% of loss is still loss only. How you can pay percentage? So in a year of loss or inadequate profit, straight away you will move to Schedule 5, Part 2, Section 2. Year of adequate profit, you want to pay them more. Sir, this year we made nice profits, sir. We want to pay 15%. Chalo, do it. Go to the company. They are also happy. They've given them dividend. The share price has gone up. They are so happy. You tell them, this year we are going to pay more. Another 3%, 4% we are paying. Can we pay? Yes, pay. Special. You propose it as a resolution, passed. Then you pay them more. Provided these people have been appointed under Schedule 5. That is very important. That's why those disqualifications under Schedule 5 are very important. That is why they give power to the central government to remove the disqualification, so that you can go for that. So if your challenge is that the disqualification is there, go there, get the disqualification removed or get the approval from the central government, then you can go for. Any of the sub-limits may be exceeded with the approval of the company in general meeting by passing a special resolution. What do you mean by sub-limit? For one whole-time director, 5%. See, for example, Vijay Adekar, Vimala Adekar, Vimal Adekar. 3 people are there. Together, I can pay them only 10%. To one MD, I can pay 5%. But suppose I want to exceed that sublimit of 5%. Suppose I want to pay Vijay Adekar, I want to pay 7.5%. The other 2, I just want to pay 3 and 2. I'm sorry, the other 2, I want to pay just 1% each. Whatever. Allowed. Sublimits may be exceeded with the approval of the company by passing a special resolution. That's all. Get it approved and otherwise you cannot. Otherwise, Vijay will get only, that MD will get only 5. Others will get the balance. But if you want to mismatch it, you want to pay him 6 and you want to pay them each 2, total 10. No problem. But for that, you have to get the approval of shareholders. See, they've rightly given this power to the shareholders because after all, it is their money. Why should they be central government and all? Just go and get the approval. If the shareholders approve, good. So, where the company has defaulted in payment of dues to any bank, PFI or non-convertible debenture holders. PFI means public financial institution. There's a list of PFIs. You can go through the net and find out. List of PFI. You will find LIC is a PFI. All the general insurance companies are PFIs. So, PFI. Or non-convertible debenture holders or any other secured creditor. See, on the one hand, there is a default to secured creditors and bank, etc. In the meantime, you want to pay more than even the ceiling limit. Come on, not fair. So the prior approval of the bank or PFA concerned or the non-convertible debenture holders or other security holders, as the case may be, shall be obtained by the company before obtaining the approval in general meeting. Meaning, you want to exceed the limits now. You go to central, your shareholders now. Before doing that, if there is a default in all these, you have to get the approval. The approval, prior approval shall be obtained. So that they should be aware that even though there is a default to them, these guys are getting more. They may not give approval. They will say, please pay my dues, then you go and pay yourself anything you want. So this is given as a protection to the bank, PFI, debenture holders, etc. Company wanting to take more by way of dividend and managerial remuneration, if it is inadequate profit, it has to come to you. It has to, you want to, even in an era of adequate profit, up to 10% no need. Up to 10% no need. Up to 11% no need. But if you want to exceed that, sorry, you want to get approval from the financial institution or PFI, etc., where there is a default. Okay. Can the company deciding to pay 11% of net profits pay the remuneration in any? No, that's what we saw now. Sublimits. If you want to exceed sublimits, we saw that now. You have to get the approval of the company in general meeting. So within this 11, if you want to pay more to part-time directors and all, you have to get it approved by members in special resolution. You can, but you have to get the approval of the company in general meeting by passing a special resolution. Sublimits can be changed, but you have to get the approval of shareholders by passing a special resolution. I gave the example now like that. Vijay Adekar, 3 people are there. Vijay is the MD. Vimala and Vimal are full-time directors. Total, they are eligible to 10. You can pay in such a way that 7 to Vijay or something like that. 1 each. Or 6 to Vijay and 2 each to other 2. So total 10. Within that 10, you can change the sublimits. Right? You can give part-time directors more and you can increase the sublimit. No problem. Provided you get a approval of the company in general meeting. In an year of profit, you can pay more than 11%, provided you get it approved by the shareholders in general meeting. And the appointment should have been made under Schedule 5. Very, very important. For which he should be qualified to be appointed under Schedule 5. In case he is not having qualification, go to the central government. Get approval, then come. So, see, you understand how, you should do all this planning in October, Baba. You can't wait for March. You can't go in March to your MD and tell him, sir, your remuneration is in excess of the limits prescribed under the Companies Act. Kindly refund it. You're gone. So in October, you should start planning. You should see what is the remuneration you're going to pay. Then see whether it will be within the limit. You have to, for that purpose, you have to estimate the profit and say this year we'll be having so much profit. Out of that, 1% will be 10% will be so much, 5% will be so much. Already we are paying this gentleman so much. So if I continue to pay, I'll exceed. Immediately what you should do, you should see whether you can go under Schedule 5, Part 2. Or if it is something else, you have to get the approval of the, if it is adequate profit, then you want to go beyond. No problem. You get the approval. All this you have to plan and do it. So at the AGM, you should go for approval. Or before AGM, you should hold a general meeting or do it by postal ballot. Finish it off. Is there any criteria for discharge of remuneration? These are the criteria. What we are now discussing, approval of the shareholders by passing a special resolution. Okay. Now, we already saw this now when we spoke about independent director. We spoke about his remuneration can be any fees. See, along with the part-time directors, independent director also is entitled to that 1%, share in that 1%. In addition to that, any director may receive remuneration by way of fee for attending meetings of the boards or committee thereof. For just attending, it is called sitting fees. This is called sitting fees because he earns it by sitting. He comes to the boardroom, sits. Therefore, he gets sitting fees. Okay. He can get it for attending the board meeting or committee meeting. Sitting fees as decided by the board shall not exceed 1 lakh rupees per meeting. Per meeting. You might think this is too costly. No, sir. Suppose you are having you had the late Rakesh Junjunwala as your director. Do you know what is this income? Do you know what is asset? So he will say, sorry, it's almost like consulting him, yeah, for about 4 hours or 5, depending on the board meeting timing. He will come in the morning by flight, come to your company's headquarters in Mumbai, or he might walk in and he might stay. So you have the benefit of a very, very important consultant. So he will say, for normal board meetings, I charge minimum 1 lakh per day or per meeting. Pay. You can, up to 1 lakh you can pay. Beyond that, you cannot. Okay. Sitting fee payable to independent directors and women directors shall not be less than the sitting fee payable to other directors. So you cannot cheat the independent director and women director. Then whatever your sitting fee you are paying to the other people, same you have to pay to this person. Okay, you can't pay less. Now, we have manner of determination of managerial remuneration. Let's quickly touch it and then we will close today. These are questions. I didn't know that I included this here. Let us see. Net profit after tax of XYZ Limited is 1 lakh. After debiting provision for tax 40,000 and sitting fees paid to directors 60,000. Okay. Maximum remuneration payable to managing director as per section 1, part 2 of schedule 5 is. Anyway, we'll be talking more about it under 198. Sorry for jumping the gun here. Means how to calculate 1 lakh net profit. You can add provision for taxation. We'll see that. Any provision for taxation made can be added because you are going to calculate the remuneration on the profit before tax. Then reduce. Then only you pay tax. So you have to come to PBT. Means so add back the provision for tax. Current tax and deferred tax, whatever add back. So you get 1,40,000. Sitting fees already reduced. Nothing wrong. You should not add back sitting fees. Sitting fees is not part of remuneration and it is deductible as an expense. So net profit is correctly computed. Don't add back. What you have is 1,40,000. Maximum remuneration to 1 MD, 5%, you can pay 7,000. Right? Okay. Remuneration payable where a company has no profits or profits are inadequate. Where a company has no profits or its profits are inadequate, the company may pay to its directors, including managing or whole-time director or manager or any other non-executive director, including an independent director, by way of remuneration, any sum exclusive of sitting fee payable to directors in accordance with the provisions of Schedule 5. That's all. Where the company has no profits or profits are inadequate, company can pay in accordance with the provisions of Schedule 5. All of them, MD, WTD, manager, non-executive director, everybody is included. Friends, the word non-executive director is not defined in the Act, but it shall be construed to mean a director who is neither managing director or whole-time director. We already saw that. The word part-time director is used, but not defined. It basically means a director who is not a whole-time director or an MD. Right. So we have now come to what is known as Schedule 5, Part 2. Schedule 5, Part 2. Remuneration payable by companies having no profit or inadequate profit. Part 1, adequate profit. Part 2, inadequate profit. Where in any financial year, during the currency of tenure of managerial person or other director, a company has no profits or inadequate. That is why you appoint him under Schedule 5 for 5 years. So, first year adequate profit, pay as per. Second year adequate profit, pay. Third year loss or inadequate profit, then come under Part 2. So, you don't have to go to anybody. Within that framework, you can pay them. So, you can pay in accordance with this Part 2. Okay, the limits given in this. So long as you can pay remuneration to the managerial person or other director. See, the other director word means, other director means other than executive director, non-executive director, or even a non-executive director or an independent director is included in the word other director. Right. Now, we have to move on to the next topic. The time now is almost 9:55. We just have another 5 minutes. I'm going to stop here today, not because it's we have come to a level. I don't want to force you with more data. If you have any doubts, feel free to raise now. I'm going to stop here. In the next class, I'm going to take up effective capital, etc., etc. Okay. Next, and then we'll go on, finish Schedule 5, then move on with other topics. Okay. If you have any doubts, you can ask me. If you have no doubts, I shall presume that. In fact, yesterday I met CEL Bhupati in an evening dinner party where we were giving an award to another famous chartered accountant from Chennai, CAV Pattabhiram, who has written the book Tech Phoenix, along with our past president CA T.N. Manoharan. They have both written. So my Rotary Club, we were giving them an award. And in that award function, we had the good fortune of CEL Bhupati was gracing. If you remember, my teacher, one of the greatest teachers of income tax, I was just talking to him. Said, sir, I keep repeating your name to students. Well, happy. And so, see, this is a respect. You see, we have to. And yesterday I was so happy to see him in the evening dinner party where he spent time and he was speaking to each other. Good. So, I shall presume that if there is no questions, there are no questions. I'm just waiting for questions. If you have any more questions, I will take them up. Otherwise, we will call it a day. I will not go into this chart. This chart I will teach you in the next class when you will be able to understand. In case you are okay, you are happy, or whatever, kindly put up a message there so that I know that you are there and you are moving. Good. So today class gets over now. I wish you all a great weekend, balanced weekend of Sunday. Have a great day. Do a little studying, of course, and do a little relaxing also. Enjoy. Bye. Sir, class over.